Hi all, we're going to be discussing a very interesting topic which can be a little bit bothersome to some people, especially newcomers in the stock market, because the fear factor is always a thing. The main things that drive us, the main sentiments that drive people are fear and greed over the stock markets, and it's you're listening to all this news, you're reading newspapers, magazines, browsing the internet, and you're seeing all those potentially bad news about the market. Then there is also some good news, and you never know what's actually really happening. So it's always under discussion, and you don't really know whether you should be a bear or a bull in a stock market. And in case you don't know, a bull in the stock market means that you think that the stock market is actually will climb, while a bear means that the stock market will drop. You think that the stock market will drop, and this comes from the fact that a bull uses their horns to pick something up, while a bear uses their claws to bring something down. So uh, I wanted to show you a very interesting chart here, which shows the depicts the history of the U.S. bear and bull markets since 1926. So that includes the Great Recession, and it's really important to know what has been happening in the markets, because if you want to invest in the markets, you kind of need to have a clue of of what's going on and not be so fearful, as you see in the so you see so many fear-based news and data that you may be thinking, is that actually does it actually hold some truth? Well, there have been a lot of corrections and bear and bull markets in the stock market over a period of 100 years, and it is important to notice, however, that none of them has been sustainable. So there has always been there has always been a change, and the periods have been alternating really. And eventually, the stock market has been always going up, and that's why owning index funds is, especially like the S&P or the Dow or the total stock market, is actually super important if you want to make steady gains over the years, over a period of 20 years, for example. Again, over a short period of time, yes, you may lose money, but over a big period of time, you're very unlikely to actually lose money. So the most notable period is actually the Great Recession, obviously, where this was actually, if somebody was part of the of that recession and they had money invested, this would hurt a lot, because you see that in a period of 2.8 years, the declines were massive. I mean, it was like 85% and then 47% on top of that. Um, so insane money loss at that time, and that was difficult to recover from, for sure. But if you did hold your money for many years, though, you would recover. However, in the periods that followed, there was huge bull markets, as you see here, pretty much with two corrections here for around 20%, and corrections tend to be like 15 to 20% for the most part. So more than a 15% is widely regarded as a bear market, really. So these are depicted as bear markets here, and for good reason. And you see that for the most part, we have been having big bull periods. So averaging like 13, 14 years, 15 years, 13 years, 13 years here. And there have been obviously some 6.5 and 2.5 years, but where we had, some losses as well. And the most notable periods were definitely the 1998 and the 2008 bear markets, and there was some loss there, but especially in our current market, where we're going really high at the moment. But as you see, it's been around 9 years. But as you see, in comparison to other high periods of bull markets, it looks like we're still in our infancy. And of course, this may obviously change. It may, we may have a bear market. We may have a bear market, in 6 months or something. Who knows? Nobody knows really. But it looks like it's more like a healthy type of action at the moment. And although you see here that the 2008 recession was a big thing as well, but again from that period and on, everything was recovered. And if you held your money, if you actually bought right here and you held your money, you would have made much more at that time after 10 years. So that's what I wanted to mention. I mean, it's good to be wary of bear and bull markets and be a little bit afraid and scared, but don't overdo it. If you are a long-term investor, just have your investments and hold them for many years, and over the years you will. It's almost certain that you will make money. That's what I wanted to mention in this video. Thank you for watching, and I think that's a pretty useful chart, to take a look at and revisit at times especially when you feel fearful. So yeah, thanks for watching, and I'll see you soon with more videos, guys. Thank you. Bye.